Nvidia stock reports earnings tomorrow, and unfortunately, the stock was down roughly 2.8%, sitting at $126 right now. Year to date, the stock is down roughly 8.4%. And on today's episode, what I want to do is take a closer look if I would buy Nvidia at these levels and some other updates impacting the overall stock right before earnings. So let's take a closer look. But before we go any further, make sure to check out my special offer at fool.com and check out my free daily semiconductor newsletter, whatthechip.happened.com.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so like I mentioned, first, I kind of want to share my overall thoughts if I would buy Nvidia before earnings, and if so, at what price point. Now, Nvidia right now, if we take a closer look at PE ratio forward, and PE ratio forward means for the end of this fiscal year for Nvidia ends in January of 2026. So about 11 months from now, that PE ratio right now is around 28.54. In all honesty, for me, I would really be buying Nvidia closer to the 25 PE ratio forward 1 year. That would be my buy point. But again, I do have a big position in Nvidia. Nvidia is my number one holding with over 25%, maybe even closer to 30% of my overall portfolio. So for that reason, I tend to be a lot pickier on when I would really like to add. So that would be about a 10% drop from here. And even a 10% drop from here will be closer to the one teams, right? So for me, Nvidia coming in before earnings, I am very bullish in the long term of stock. And even though I am super bullish, I always want to have at least some control, right? Some control in my overall market exposure. And it already being close to 25 to 30% of my portfolio, I tend to be a lot pickier. Now, if I didn't have a big hook position, I believe this stock will actually do really well in the long term of things. And fighting between a forward PE ratio of 28 and 25 is not something that I personally would fight over if I didn't have a position. So let me know in the comments below. Are you buying Nvidia at these levels right now? And if so, how big of a position is it in your portfolio? Now, what looks pretty interesting, and we're going to look at some of the other big tech players out right now, but forward 1 year PE ratio, which for Nvidia ends in January of 2027, so about 23 months from now, is sitting at 22.71. I think that is extremely cheap when looking at kind of those forward valuations. Obviously, this is going to be a stock that's very volatile and it's all dependent on the AI market. And at the end of the day, the AI market is what's going to drive this stock, right? If the AI market is really as strong as many of us believe, then these are very cheap. But if you are hesitant of the growth in the AI space, in AI data center, in AI CapEx, then while it might look cheap, this stock might not be the best solution for you. So for owning Nvidia, in my opinion, you have to be pretty much kind of like an extreme bull in the AI market right now. So next, what I actually wanted to look at is kind of look at the current valuations of some of the other big tech players. So PE ratio forward, and for each company is a little bit different, right? Everybody has kind of like a different fiscal year. We know Microsoft only has about 2 more quarters. I think Apple is pretty much in line, or it still has kind of 4 quarters away. And we can see Nvidia is the cheapest out of those looking at forward PE ratios. Now looking at forward 1 year PE ratio, the difference in price valuations is a lot wider. And we can see that Nvidia is cheaper than those other tech giants. So again, I mean, if you were to tell me though right now, Jose, you had to invest in Apple, Microsoft, or Nvidia based on valuation and based on where I believe the most growth opportunity, I think I would definitely pick Nvidia, no questions asked at the moment, especially look at that forward 1 year of sitting in the low 20s. Like I mentioned, if we see this stock, which is not impossible, right? And even though I am kind of this huge bull in Nvidia, I believe that this stock is always going to be very volatile. So if you told me tomorrow before earnings, we get below 120s, I wouldn't be shocked. Also, if you tell me tomorrow before earnings, we get to 140, I wouldn't be shocked either. Now, a wild prediction. predictions are with, again, predictions could be wrong, but a wild predictions. If we end the day for Nvidia tomorrow below 130, I believe the stock price will go up after earnings. Again, just a guess, and I just want to kind of just give some random predictions of my overall thoughts, but obviously these are not guarantees. So that's pretty much what I really wanted to start with this episode is kind of look at valuations and kind of share why, even though I am bullish on Nvidia and the stock prices, why I personally wouldn't buy. And it's all because of market portfolio management, which I think is very, very crucial at the end of the day. Now, now next topic is recent news impacting the overall stock from price targets. And in the past few hours and the past 24 hours, we've seen a lot of price target reiterations. So we saw, for example, Bank of America reiterates Nvidia stock buy rating and $190 price target. They are actually very bullish, it seems. They believe that the growth projection surpasses the consensus estimates approximately of 61% year over year, where Bank of America actually believes that Nvidia can kind of double their year over year data center growth revenue. So, this is one of the most bullish cases that I've seen, but we can see it's obviously one of the most bullish price targets as well, sitting at $190. So most analysts right now were just reiterating their price targets. There were no real changes. We can see Morgan Stanley maintains Nvidia stock as overweight with a $152 target. Piper Sandler maintains Nvidia stock at overweight with 175. We had another one, Evercore ISI, maintain Nvidia stock outperform with 190. And I believe even Truist also had another reiteration today for Nvidia. So there hasn't been any major changes from analysts, at least the eve before Nvidia. And remember, I am going to be doing a live stream on Nvidia's earnings call tomorrow. So make sure to subscribe to the channel to be able to follow the earnings preview, the earnings, and the earnings call. So definitely check it out. Now, the final topic I want to take a closer look at is it's actually going to be a lot of topics in here, but there are reports that NVIDIA's H20 demand is picking up. And we're seeing reports like this where Chinese firms boost NVIDIA's H20 chip orders amid DeepSeek AI booms. And this is by Reuters, right? So the bullish case here is that the DeepSeek market, the DeepSeek drama has created a huge boom in AI solutions, especially in Chinese market. So a lot of these Chinese players are trying to load up on AI chips to really kind of ride this DeepSeek boom. Now, NVIDIA is only able to sell the H20 chip orders over there. So it's kind of helping with sales there. And I actually, well, I believe this is bullish for the overall stock. And in the short term, it could probably help NVIDIA beat earnings expectations because they might be selling a lot more H20 than previously expected. But I believe there is more to the story. So through the channels that I have been following, there are two topics that come in hand and they actually both kind of unite together. So recently we have been hearing that Trump team is looking to tighten the Biden era China chip controls based on Bloomberg. So pretty much the Trump team and the Trump administration is looking to enforce or add more restrictions, export restrictions to China, which might eliminate the ability for NVIDIA to sell the H20. And for that reason, it's not the DeepSeek era or the DeepSeek boom. What many believe might be happening, or not many, what I believe is happening is right now, Chinese players believe these export restrictions are true. So they're trying to buy as many H20s as they can before it gets hit by restrictions. And obviously, I do believe restrictions would cause some negative price target volatility for the stock, but overall, there's tons in demand globally for the AI market. Now, another kind of point of to this thoughts right here is I have been following Dylan Patel of Semi Analysis, a huge semiconductor firm with a lot of great research. And I don't know if it was in a podcast or if I read it in one of his recent newsletter, but he did mention that NVIDIA is suspending the production of their H20. And he believes the only reason NVIDIA would do that is because NVIDIA is already expecting their H20 to be hit with export restrictions. So it seems like based on semi-analysis supply chain outlook, that the H20 is eventually not going to be a product right now. So definitely some bullish and bearish case there. Bullish in the short term because it is kind of creating this massive buying of H20s in China. The bearish case is there is the potential that Nvidia is again going to lose that Chinese market, which had recently started to pick up because of the H20 space. So I think this is going to definitely be something to discuss during the earnings call. And as an Nvidia investor, it's definitely something you're going to want to pay attention to. So I hope you guys enjoyed today's episode. Like I mentioned, I am very bullish for Nvidia earnings. Obviously, even though I am bullish, there are things I want to listen to. And I think the biggest questions for me are how has the AI diffusion law kind of impacted any guidance in the future? And the second is kind of more export restrictions and how Nvidia is seeing the market. I think those are the two biggest ones that could create some bearish pressure. Everything else, in my opinion, is just noise. So I hope you guys enjoyed the episode. Take care, have a good day, and see you all next time.